Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 10, 2021. I want to talk about small cap stocks with the great growth potential. Think about 10x potential multi-bagger type candidates. So I love investing in small cap stocks because they give you outsized return. Apple can only go so higher, but these small caps stocks can triple or even 10x potential. So with that, let's get started here. I got few stocks for you here. First one is Wanda Pharmaceuticals. It's a little known biotech company here. It's got some great potential in pipeline. We'll go into a little more details about Wanda and what it has to offer. And then we got a little company called Perion here. They're into digital advertising. Everybody wants to stretch their budget and advertise effectively. That's where Perion can come into play. And then we got here a little known company called VERU. VERU is an oncology company with a lot of pipeline. They manage prostate cancer, breast cancer, and many other indications. With that, let's jump in and get started. And from a stock news perspective here, we got here a company called HUT8, HUT is the ticker symbol here. It's adding Ethereum to their portfolio. I think Bitcoin is going to be only stronger as we go forward. It's good to invest in stocks like HUT8 and even Bitform as an example and take it from there. And then you got a little known company called Phenolution. It's based in China and they provide, they have a lot of technology platforms here. I think it's good to look at what this company does and invest slowly. And we got here Btbt. It's again a Bitcoin play, cryptocurrency mining here, and they're also making some good headway. Stock has a rocky road, but overall it tends to go higher. And then you got here Perion Network. They're a global advertising technology, and they're also doing pretty great. And we got here small company called Catalyst CPRX, a biotech play. It's also a great one. I think we should invest, for the future for 10x potential. And then you got your GILT. It's a GILT. Also a great company. Provide transport networks and broadband services in Peru. And we've got Raja here. It's again a small company, and they're also making some good headway, and they also have a great growth potential. And we've got growth generation for you cannabis folks. I think you might love investing in cannabis stock here called GRWG, and their stock is has a rocky road, but overall they should do well as more and more states ease the regulation for cannabis. And then we got here Smith and Wesson. Wesson, it's a gun play. Gun stocks tend to be rocky, but overall, this stock is right now beaten down, and it has a greater potential as we go forward. And then you got a little company called Proto Labs. This used to be Kathy Wood's favorite stock. Right now, it's fallen out of grace. I would pick some Proto Labs here and invest carefully. And then you got your HIVE blockchain. Off late, blockchain is a great technology. Everybody wants blockchain, and this is a good play to invest in blockchain and take it from there. So with that, let's jump in and look at a few of these stocks in a little more detail and see what we can make out of this. From a stock chart perspective here, top of the list, we got Bitform here. The way I organize this chart is really organized by 1 year performance here. Stock at the top here has got great 1 year performance, 2149%. You cannot see such performance in stocks like Apple or Microsoft. That can only happen in small cap stocks. And for your benefit, I also have market cap and how is the sales growth here. All these stocks have got nice sales growth and gross margin. All these stocks handily beat rule of 40. And then you got net margins. Some companies don't make money off the gate. They might lose money in the beginning, but they will manage it as we go forward. And I want to make sure the debt to equity ratio is low. I don't want to include companies that take too much debt on their balance sheet. That's why in this chart here, all the debt to equity ratio is pretty lower, below 0.3. And we got here, we don't need to think about RSI when it comes to these type of growth stocks, because they tend to have a higher RSI, as you can see here. NR 72, and we got SD 64. So if you want to look at the good entry point, then I would say pick stocks with a lower RSI like Bitform, HUT 8. But if you're a long-term investor, you could pick some of these stocks up even though they have a little bit higher RSI. And then we got here the performance all the way from 1 day to 5 year, and how much the stock is off of 52-week high. So as usual, some of these stocks have got high short ratio. That could be for your advantage. You could use it as a swing trading if you want to. But in general, we want to look at multi-baggers with a lot of potential. And look at some of these smaller companies like VERU, like we talked about, great biotech play, $8 stock with great potential here. And as you look through here, VERU has done okay for 1 year. It's about 219% for 1 year. It's actually great. And also, from a color coding perspective, the stocks that satisfy rule of 40, all of them are, provided here with the, as you can see here, with the green background here. In general, all of these stocks satisfy rule of 40, as you can see here. Um, let's look at a few of these stocks here. There are a lot of my favorite stocks here. Little known company like Copin, as an example, got great potential. Again, it's done nicely for 1 year, as you can see here, 251%. And we got steel company here, Timken, great potential. Bit mining, BTCM, and TIGR, A10. Trivago, it's a low price at this time. You could invest in these type of companies here, and wait maybe a couple of years, and you'll have a nice reward. Then we got few more here. We got Holly, GILT here, GLAT, VFF, Wanda, and RADA. And all these are small cap stocks, as you can see here. Nice sales growth and nice gross margin, and they've done great for 1 year, as you can see here. All of them have got more than 50% performance in 1 year. So you could look at these names and invest for the future, and shove it away. And then you got few more names, even though all of them may not have nice 1 year performance, some of them do, but these also have great potential. We got stocks like App Harvest, Joint, which is JYNT, Marathon Digital, LAC, which is lithium. As you all know, renewable battery is a future, and a lot of these electric vehicles and all these places, they will need lithium. I think Lithium America is a great one to invest in future of this EV industry and battery industry. And then you got a little known company here, Axsome. Axsome is a rocky company here. Stock goes up and down wildly. As you can see here, right now Axsome has not done great for 1 year, but this has a potential to become next Regeneron or next Biogen or next Amgen, as an example. That's why, even though right now it's not giving a good picture with a little bit bad performance, but it's got a great potential. And then you got few more here, HCAT, GPRE, BLNK. 5 years from now or 2 years from now, you will see a lot of these charging stations everywhere for the EV. I think this is BLNK is gonna be a good one, secular grower. Right now it's a little bit struggling, but I'm sure this will do well. And then you got here ADC, Varonis, again one of my favorite one here, and PRTS, Corporate, a great stock. And then you got Coursera. Everybody wants to learn online. Coursera can really help there. And then you got Eco and Sundial growers. The last one is again a cannabis play here. You could take a look at these companies here, even though some of them may be struggling by looking at 1 year, like say Axsome as an example, it's struggling a little bit. And we got App Harvest here, all red, but these have got great potential. You could buy some and sock it away. And now what we'll do is we'll look at few of these stocks in little more detail and dig down and look at some numbers and see if you can make sense out of these stocks, and if you can buy these stocks. With that, let's jump in here. So if you look at few charts here, look at a cursory look and see what we can make out here. First, we got Bitform here. Nice looking chart, as you can see here, up and down as usual. But look at the on the balance volume. So it's pretty consistent here. There is some good buying pressure here. Bitcoin, it goes up and down as usual. Sometimes there is a lot of bad news in the Bitform area. That's when you can buy some of the stocks like BITF and take it from there. And we got HIVE blockchain here. They're into cryptocurrency mining. It's in the same category. Look at the on the balance volume here, going pretty nicely. I would pick up some of this HIVE here. They're into crypto mining. And primarily in Canada, Sweden, and Ireland. You don't need to worry too much about China here, and take it from there. And then you got Optimize RX here. They're into digital health. Everybody wants to look at their life and their patterns on the digital here, and this company can really help the digital health. Nice looking chart. Look at the way stock is going up, and nice looking on the balance volume. I would pick up some of this Optimize RX here, and invest for the long haul. And then you got little known biotech company here, Veru. They're into management of breast cancer and prostate cancer. Even though stock is a little bit in the trading range, look at on the balance volume. Nice on the balance volume here. And all these companies that we covered here have got nice 1 year performance, as you can see here. They got nice fundamentals with the rule of 40 easily satisfied and nice gross margin. And stocks like Hive and OPRX also have a good net margin. These companies are making money. So with that, take a look at these, invest in these companies and sock it away, and don't look at them for a while. And then we got few more here. We got Phenolution, a China-based, online consumer finance type company here. So look, stock is trading sideways. On the balance volume is pretty steady. As we look through here, nice sales growth and gross margin. I love this. Has done okay for 1 year, 215% for 1 year. And they got TIGR here, Uptech. TIGR chart is not great right now. It's a little bit ugly, but overall this company tends to manage pretty well. They're into online brokerage, in Chinese, for Chinese investors. They have a global platform. I think this is also a good one to buy right now. Stock is really down at this time. Good to invest and forget about it for a couple months or couple of years. And then you got Holly here. Holly is into, it's from China again. They have automation solutions in China, Southeast Asia, India, and so on and so forth. Nice looking chart. I think stock has gone up nicely. Nice gap up here. Look at on the balance volume, pretty good. You could buy some of these stocks like Holly, just a $20 stock here. Nice sales growth. Nice on the balance volume, has done great for 1 year, 78%. You could buy some and take it from there. And last we got Wanda here. These guys are a pharmaceutical company here. They help with the sleep disorders, wake disorders, and treatment for schizophrenia. I think it's also a great company here. Stock is trying to make a small move, as you can see here. Still $18 stock with great potential. 10x bagger easily. So with that, what we'll do now is we'll look at some of these stocks in little more detail, dig into some of the fundamentals, and see if it's worth buying here. With that, let's look at Bitform first. Bitform is a Bitcoin mining type play here. They have blockchain infrastructure. It's one of the largest cryptocurrency mining in North America. So as you can see here, they got various statistics here, 82 MW, and they got corporate hash rate here 1.6, and right now stock is at 5.13. I think Bitform has got great potential. Right now stock is a little bit down here. You could buy and sock it away. Cryptocurrency is going to be one of the major players as you go forward. More and more companies are really embracing this new form of currency. I think this can grow as we go forward. So with that, from a value proposition perspective, Bitform wants to do good operational excellence with their nice data centers here, and they have a nice growth pipeline here. They have their energy portfolio with the 159.5 megawatts. I think they also have some growth for phase 1 and phase 2, and they're focusing on the clean renewable energy. I think this is where Bitcoin mining is a very energy intensive operations. I think God look at renewable energy as a source. That way, you are really helping the environment also, and help with the ESG type investors. So with that, let's jump in here. If you look through the numbers here, from a Bitcoin Bitform Limited BITF, from an earnings per share perspective, as you can see here, right now company is not making money. They're showing some negative earnings. I think which is okay. As you can see here, did nicely, came down, did nicely 2019, came down. I think whole Bitcoin area is a little more volatile, I would say. That's why you should invest and forget it for a couple years. And if you look through here, from a sales perspective, sales is pretty steady. That's what I like about these type of companies. Even though earnings can fluctuate, but sales is pretty steady. I think that's what we like to see. And from a shares outstanding perspective, shares outstanding is growing slowly, which is okay. As long as the revenue also grows, I'm okay with the little bit shares outstanding growth, even though I like to see it flat or down. And from a chart perspective, Bitform BITF, nice looking chart. Off late, crypto is going up and down, but overall trend is up, as you can see here. So that's why I think it's good to invest in BITF here. It's nicely above the 50-day moving average, as you can see here, making higher highs, as you can see here. Volume is also picking up of late. Nice positive green candle. Stock is at $5.13. You could buy some Bitforms here and sock it away. And let's look at a few more here. Let's look at a little more fundamentals of this company here. Stock price is $5.13. Market cap is $848, as you can see here, $848 million. And one thing I love to look at the stock chart is how the company is doing on a consistent basis, quarter after quarter. You can always look at a number in point in time. It's very difficult to understand the trend. I love to look at the trend. That's why I normally look at chart like this here. Tells you how the company is doing quarter after quarter. As an example, Bitforms here, $53 million market cap back in 2019. September increased slowly to say 161 million back in 2020, and it became 598 million in 630. Right now they are 848 million. Generally, there is up and down, but if you look at the trend here, that tells you the company is really growing their market cap. That tells you company is taking market share away from its competitors. And from a price perspective, same story, it goes up and down. Back in 2019 September, it was 67 cents. Now they're at $5.13. The trajectory is going higher. The trend is going higher. I like that. And if you look at the sales here, same scenario here. Look at the sales back from September 2019 all the way to now. They have done nicely from a sales or a revenue growth perspective. I think it's good to look at these type of trends here. Otherwise, if we just look at a number point in time, you don't know the trend. So that's why look here. There's a good trend here. You could invest and forget for next couple of years. And look at the sales growth here, quarter over quarter. Nice number here. They are really doing great. As we see here, the trend from a sales perspective is good, 8% to 208% to 396%. That's a great sales change here. Some of these could be, as they look at the negative number, compare it to a positive number, it will increase, but generally trend is higher. That's what I look for. And then you got here earnings per share. Company is losing some money, as you can see here, but still the it's making some progress from a 6 cents per share loss to 2 cents per share loss. That's a positive change. That's why I like this trend here. And from a cash perspective, these guys have got cash. They're not going to run out of cash here. $83 million cash. I think they've improved their cash situation in 2021. That's a good story. And they do have some debt, which is manageable. If you look at the debt to equity ratio, it's very low. And free cash flow is negative right now. I think they should work on free cash flow. Operating cash flow is also negative, but gross margin is good. They have some pressure on the gross margin in 6/30, June 30 quarter. It came down a little bit, but generally it's doing well. It's a positive. Look here, they were negative for a while, but right now gross margin is positive. That's good. I mean, for the companies like this, I would not look at operating margin, net margin right now. Company is still trying to make it, successfully. I would ignore this for now. Look at the trend in other numbers here. From a price to sales perspective, this stock is really not very pricey. I would buy this. So in conclusion, I think Bitforms is a good play here. You should buy some Bitform here as crypto makes some big bad news. Buy some Bitforms here and sock it away. So with that, I'll conclude this Bitforms here, jump into our next stock. Let's see what we have in the next stock here. So next is a little known company called VERU. VERU is a pharmaceutical company. They're a biopharma company focused on prostate cancer and breast cancer. They have cutting edge research and development and great pipeline. Let's see if we can invest in VERU and take advantage of this whole innovation in oncology and cancer area. So as you look through here from their pipeline, for these biopharma companies, we should always look at what's in the pipeline. And here, look here, we got two indications here. I think they are doing nicely and they're into phase 3 already. I think these can do well as we go forward, and they got patients enrolling in phase 2. And for these two, I think these are the breadwinners, as we say. And then you got here, these two are prostate cancer, and then you got breast cancer here. In the breast cancer, again, we are doing nicely here. We got 3 indications going on here, and there is a lot of planned activities here for the patients. And finally, they're into virology also. Here also, they're enrolling the patients. So in general, they got 2 candidates here which are making money now. And they got some candidates where they're awaiting some of these results in phase 3 and phase 2 and so on. So overall, from a pipeline perspective, Veru has got the pipeline and they can be the great stock of the future, if they execute well. Got 10x type potential here. Next, we'll look at their numbers into a little more closely. Company is not making money right now. Earnings is negative, as you can see here. These type of early stage companies, it can be a little bit rocky road in the beginning, but finally they will do well. But look at the sales here. Sales is going at a nice clip. I like the sales clip here. I think year over year, they're putting up nice sales. That's what we look for. These early stage companies can lose money, as you can see here, but they keep putting on a nice growth. That's what we look for in the 10x potential candidates. Look at the shares outstanding here. I like the shares outstanding here. I mean, I don't like it here, but if the company is doing well from a sales perspective, it's okay to have a little bit, outstanding increase, because these companies need working capital. One way to raise capital is to buy, selling some of these shares That's why outstanding could be a little bit growing here. I'm not too much concerned. If I say huge growth in outstanding, I would be concerned, but this is okay. As they're increasing their sales nicely, I think we can manage a little bit higher outstanding shares. That's okay. From a stock chart perspective, what do you expect? Little known biotech play goes up and down, but eventually it will go up with their nice pipeline. Look what happened here. Nice growth. Probably there is some announcement around FDA, one of their drugs and whatnot shot up, and now it's kind of normalizing. That's why I like stocks like Veru. Invest for the long term on stocks like Veru and just forget it. And then if we look at the numbers here, same trend here. Stock is at $8.45. Market cap is 674. Look how the stock has, market cap has done. From a trend perspective, back in 2019 March, $91 million. Look, they're at $674 million now. And if you look at the stock price also, it was a $1.46 stock back in March. Now they're $8.45. Nice trajectory here. Folks, don't pay too much attention to these small cap stocks. But if you just buy and sock it away, you'll make a nice profit. And from a sales perspective, I like the sales trend here, nicely going up, as you can see here, 7 million back in 2019 to 18 million back in June here. And also nice sales growth. I love this sales growth here, or revenue growth. Nice revenue growth, nice uptick here. That's always good. From an earning share perspective, they're losing money, but look at the trend here, losing money, and they're losing less money as they go forward. That's always good. They got nice cash here. We don't need to worry about cash. I think they have enough cash to survive for a long time. In the meantime, they're also bringing more revenue here. That will help. I would not look at, debt to equity is pretty constant here. That's a good one. They're reducing their debt. It's always good. And free cash flow is negative right now. Same as the operating cash flow. Gross margin is good here. I think they have a little bit up and down gross margin, but generally in the highest 70s. I think that's a good one also. And operating margin is not there right now. We can ignore it for now. And look here, they're spending money on the R&D. The breast cancer, prostate cancer, oncology. I think they all need a lot of investments. This company is really putting money and investing in their R&D or research and development. That's a good one here. That's why I like stock like Veru here, and they know what needs to be done. And from a price to sales perspective, it's not very expensive, 11.2. I think it's a good one here. With that, in conclusion, I think it's good to buy some Veru into your portfolio, and keep it for a 10x potential for a long haul. Next, we look at one more here, Wanda. Wanda is a leading global biopharma company here. As you can look through here, they got some important medicines. They have new technologies, including genetics, genomics, and so on and so forth. And the CEO is also a founder here. I love companies where we got CEO still at the helm here. I think this is one of those companies where CEO is really at the top here, trying to take the company forward. Overall, I think it's a good company. Now let's jump in and look at some more details. As you look through, this company here, Wanda, they are making money. As you can see here, earnings per share is positive here. I think, that's a good one here. And as you look through the sales, look at the sales here. I love the sales here. I like this type of clip here. It's nicely increasing the sales year over year. That's always good here. And shares outstanding is not it's okay. It's manageable. Sales is growing. They're increasing their outstanding a little bit. That's okay, not a big deal at all. So overall, from a numbers perspective, it checks out for me. I would be willing to buy Wanda and forget it for a while. All these biopharma early stage, they have rocky road. Finally they got potential to become great stocks like Johnson and Johnson or Regeneron or Biogen. That's why rocky road here. Stock is trying to make a move here. $16 stock. I would invest in stock like Wanda here, very cheap stock here, and invest for the long haul. And if you look at their pipeline here, they got multiple pipeline here. They got a pipeline here which is into regulatory approval stage, and one more pipeline here along bipolar disorder and so on and so forth. And it's in the phase 3. And we got a couple more here in phase 3, phase 2, and phase 1. So overall, Wanda is not a one-trick pony. It's got a lot of pipeline, has a lot of potential. That's why you could buy and sock it away. And if you look through the number here, Wanda is, as you can look through here, market cap was 968 million back in March 2019, and it grew nicely. I mean, not a great clip, but it's done nicely. And right now it's around um, around 1.6 billion. So I think it's a okay clip, not a huge big clip. These stocks have a bumpy road, as you know. They got some clinical approvals, FDA approvals, up and down rocky road, but overall it's done nicely, even though it's decreased its market cap back during the COVID days, but came back nicely. And from a price perspective, it was a $18 stock a while ago, and right now also it's a $18 stock, but they've done a lot nicely. They got a lot more pipeline. As you look here, the stock price came down back in 2020 during the COVID days, but picked up nicely from there. And from a sales perspective, it's a steady Eddie type stock here, doing sales pretty nicely here, pretty nice clip here. Not a astounding sales, but it's a good steady growth here. Sales growth, as you can see here, single to double digit at times. That's good. Company is making money, earnings per share positive. They're also surprising Wall Street with the positive earnings per share surprise here. I think last time it was neutral. They got a lot of cash here. Look here, they're improving their cash balance here. That's always good. They do have some debt, but very low debt. Debt to equity ratio is almost zero here because of their low debt situation. They do have positive free cash flow and positive operating cash flow. Nice gross margin. I love this gross margin here. That's why I love to see the trend here, just to see what's going on. Company has got this operational rigor. They keep the gross margin at 90%. That's a great improvement. And look at the operating margin and net margin. Again, they're keeping it positive here. They're making money end of the day. They're also spending good money on research and development. I love to see these pharma companies and early stage companies spending money on their drugs. That will be a great catalyst going forward. And they do have ROA and ROE, both are positive. That's a good indication. And from a price to sales perspective, stock is very cheap. So by looking at this trend here, I like this company. They are a steady Eddie type company, got great pipeline candidates in their pipeline. I think this company can be a multi-bagger. So with that, I recommend you to look at Wanda and see if it's good for your portfolio and sock it away. Next, we look at one more company here, Perion Network, ticker symbol PERI. These guys are into digital advertising. Everybody want to advertise, but they want to capture some revenue also. This company can help to advertise in social media, display, CTV, and so on and so forth. And they can help with your most complex needs with their nice solution here. And I think it's a good company doing some great headway. With that, let's jump in here. From a overall growth perspective, in 2020 we had around 340 billion advertising spend. As you go into 2024, look, we got 542 billion dollars spent. So spending on digital advertising is going up. It's a secular trend, and this company is going to really take a big bite out of the spend here with their social media, with their display video, and also around the advertising and shopping. I think this company can do really well and capitalize on this trend into consumer going more into digital area, and these folks can advertise and help the brands here. And if you look at the numbers here, Perion is a positive from an earnings per share perspective. Company is making money. That's a good story here. And as you look through here, sales perspective, nice sales clip here. They're making nice sales. I like the sales clip also here. They got a little bit trouble back in 2018, but now they're improving nicely. Shares outstanding is steady. I like to see it flat or lower. I think this company is really keeping the shares outstanding pretty flat. And from a stock chart perspective, nice looking chart as you can see here. It's nicely above 50-day moving average here. I would recommend you to look at PERI on any down day. Buy some PERI and sock it away. The stock will do nicely. And now we will look at numbers here. From a number perspective, Perion Networks, ticker symbol PERI, $21 stock, market cap is 735. That makes this a low cap stock or a small cap stock. Look through the multiple time frames here, multiple quarters, to look at a trend to see how the stock is headed. Stock, it was at $68 million market cap back in March 2019. Look where they're here right now, 735 million. That's a nice growth here. That tells you in this competitive digital advertising world, this company is taking market share. It's always good to see. I mean, they do have some rocky road, as you can see here. It came down a little bit and went up. I think that's all expected here. This is around COVID time frame. Stock price is very nice, steady eddy, I would say. $2 back in 2019, and now they're at $21. It's a multi-bagger stock already. I think it's got potential to be the multi-bagger going forward. Nice sales here. I love the sales clip here. They're growing their sales nicely, 60, 83, 118, and so on and so forth. I mean, they do have some bumpy roads in between, but overall it's trending in the right direction. And nice sales growth. I love this sales growth here. Look here, 81% sales growth, 36, 51. That's great. And company is really surprising Wall Street with the positive earnings surprise here. As you can see here, it's always good. Wall Street loves consistency. I think this company is giving that consistency. And they have a lot of cash. Don't need to worry about cash burn here. A lot of cash here. I love it. Debt is low. That's why debt to equity ratio is manageable at 0.1, which is very respectable. And they do have positive free cash flow, positive operating flow, improving nicely. As you can see here, trend is nice. And they do have positive gross margin, which is improving. I love this too. They do have positive operating and net margin also, which is also good and improving. And they do spend on R&D. That's always good. I love these companies to spend on R&D versus staying on their legacy laurels. And they do have positive ROA and ROE. Both are good. I like this to be double digits, but I think we are heading there. There is a good improvement, as you can see here. And from a price to sales perspective, these guys are very, very, very cheap. I would buy some and sock it away. So with that, I think this is overall a good company. I would recommend you to buy this company into your portfolio. So we got some numbers here as you look through here. As you see, from a 2020 to 2021, nice 82% year over year growth. That's always good. They got momentum on their side. And look at the CAGR, they have done nicely from a compounded annual growth, 29%, all the way from 2019 to 2022. I think company is really showing some momentum here with all the digital advertising, going higher. This company can capitalize nicely, and they're also, having their clients spend more money. That's always good. So with that, we have one more company here. It's Up Fintech Holding. Most of you know this company as TIGR. They are into investments. They have got this nice brokerage platform here. Their technology makes investing more efficient, and they're licensed broker for global trading. That's why China has got a lot of population, and a lot of these Chinese clients, they want to trade globally, and this company has a nice platform to let you do that. And if you look through here, they got 1.4 million account holders. That's always good. It's growing. And they got 219 billion annual trade volume. That's a huge number here. And they got one-click subscription services for US and Hong Kong IPOs. All these Chinese traders, they want to buy Hong Kong and US based companies, and they can do it through this one-click option with this TIGR or UpTech. So overall, I think stock is, company doing nicely. Now we'll jump into some numbers. As you look through here, this company's earnings per share positive. As you see here, trend is good here. I like this. There's some trouble in the past. Now their earnings per share positive. These guys are into crypto. These guys are into online brokerage, like we talked about. Look at the sales growth here. I like this clip here. Doing great between 2016 to 2020. Nice clip here. I love this. Shares outstanding perspective, it's pretty flat here. I like to see shares outstanding flat. Stock, as usual, it is a rocky road. All these little companies, they are known to have their rocky road when it comes to stock price. Right now, great time to invest in TIGR. As you can see, a stock, you are getting the stock at a bargain price here. I would buy some TIGR, sock it away. China in general is having some trouble in the past around regulations and whatnot. Many of these Chinese stocks are down. I think the stock is trying to make a small headway here. I think stock should improve as you go forward. You could buy some uptech and sock it away. As you look through the trend here, I love to see the trend, multi-quarter view. Look through here, stock was at $1.7 billion market cap. Right now they're into same market cap because of the rocky road. This is a little company here. As you look through here, they have done nicely. They became a $4 billion market cap back in 630. These were the good days for the company. Now they've dropped a little bit. This is the time to buy Fintech here, TIGR, because it's got good potential. A lot of these Chinese consumers want to trade globally, and this company can help with that. From a stock price perspective, again, rocky road here. Stock has done nicely, and they dropped big time. Right now they're at 10.7, below their 2019 price. I think it's good to buy when it's down like this here. Look what happened. They were down earlier, $4, $2, came back nicely to 17.28. That's why these stocks have got bumpy, rocky road here. Good to buy when they're down like this. From a sales perspective, pretty nice sales growth here, 98%, 255%, so on and so forth. By looking at this, you'll see, hey, there is some little bit trouble here. Numbers are not great, but I think they are going after their higher numbers. The moment you go after bigger numbers, you'll have a little bit smaller growth, which is expected. And as you look through here, earnings per share perspective, this company is not very consistent. I think last quarter, back in 630, they gave, earnings per share was a little bit negative. But overall, I think they're doing okay. It's a little bit bumpy road, early stage companies, which is understandable. They got a lot of cash here. We don't need to worry about cash here. They have low debt. Debt to equity ratio is 0. That's a good sign. Company is not taking too much financial burden on itself. Free cash flow and operating cash flow is 0 right now, which is probably it's okay for early stage companies. Nice gross margin. It's a little bit down right now. I would like this to improve, but in the brokerage industry, as you know, it's a thin gross margin. I think which may be okay, but I like to see the number trending higher. From an operating margin, net margin perspective, it's negative, and ROE and ROA are positive. That's always good. From a price to sales perspective, it's not too expensive, not too cheap. I think it's okay right now. So with that, I recommend you to look at TIGR here. Take advantage of stock which is dropped significantly, and buy some TIGR and sock it away. So with that, thank you very much. Happy investing and trading. Please subscribe.